Welcome back to the Junior Small P channel. Let's take a quick look at some headlines from the past couple of days as well as today. Pardon the stuffy sound because I do happen to have a cold. A little bit under the weather just today. It seems like every spring this happens. I don't know if it's the temperature fluctuations or what, but I get these little head and chest colds right about this time of year. Citi, risk of global recession rising. Of course, that's a surprise of seeing it come from a more mainstream outlet, a bank, saying that the risk of global economy falling into a recession is rising as fundamentals remain poor, analysts at Citigroup said in a note Wednesday. It's always taken more seriously when it comes from institutions such as this, whereas if other people seem to come up with similar statements, it's not taken as seriously. For example, Peter Schiff and those like him. We are currently in a highly precarious environment for global growth and asset markets after 2 to 3 years of relative calm, Citigroup said, noting that global growth was unusually weak in the fourth quarter at around 2% on year. And this is an opinion paper. This is why you can expect another global stock market meltdown. Lengthy with a video attached to it, but in summary, the conditions for a crisis are now firmly established, basing it on things we've already talked about here. Overvaluation of financial assets, significant leverage, persistent low growth and deflation, excessive risk-taking, reliant on central banks for liquidity, and the suppression of volatility. All of this stemming from a long stagnant period where we're living at low interest, low to zero interest. You know, 0.25% is pretty much zero interest. And as you see, some of the mainstream outlets, you'll see some snapshots here from Bloomberg, are discussing gold. It's showing up more and more as a discussion piece. It's interesting how it always occurs this way. Gold drops for a little bit, everyone makes fun of it, slams it, mocks it. It's not taken seriously, it's pretty much ignored. And as soon as it bounces and makes some recognizable gains in percentages and in dollars, that people go, wow, whoa, it's behaving pretty well. Then the interviews start, and the financial outlets throw charts up, put their little suits on and bow ties, and like to discuss gold as if they had taken it seriously this entire time. Interesting piece of news here. We'll see if this comes up. You hear rumors like this every so often, every couple of years, but this could be real. This could be the big deal. China plans to launch a yuan-denominated gold fix on April 19th, according to sources. This, I thought, was very interesting. London, February 25th, 2016. China plans to launch its new yuan-denominated gold pricing fix on April 19th this year. The launch date has been officially settled, and draft trading rules have been sent out to those banks that will be involved in the Shanghai fixing. Fast Markets understands. The banks that will participate in the planned launch are predominantly Chinese, but Fast Markets understands that foreign banks could also be involved, according to sources. This could have a significant impact, ladies and gentlemen, a significant impact on gold trading, the gold price, just the global market for gold. And it's going to be, I think, positive for gold, positive in the price anyways. This is going to open up some doors. It's going to change things, probably dethrone some of the Western institutions and banks that have so often and so much had the biggest influence on determining what the price of gold is going to be today or tomorrow. So pay attention to that. Breaking. U.S. government releases its 2015 financial statements. You can probably guess what that means and what it looks like. We're not going to cover all of it in depth, but I wanted to cover some highlights here because it's interesting here. 37% of the government's total reported assets are student loans. I don't know how they can call those an asset, which is now considered one of the most precarious bubbles in finance. Basically, the government gave $1.2 trillion to a bunch of drunken morons to go rush and study subject matters that most likely are not going to pertain to or translate into any form of an income or useful type of occupation here in the United States or abroad. But this is similar to the subprime market in 2008, and delinquency rates are rising now at 11.5%. Of course, these kids drank beer, snorted coke, and then smoked or snorted all the money that they got on these loans. I'm not saying everybody, but there's a lot of kids, a lot of individuals that went to school, did nothing with it, probably don't even remember what year they attended or perhaps what classes they took. And they're now serving Starbucks, working in bowling alleys, or in prison. Who knows? But not my problem. Unfortunately, we loaned them money expecting it to be paid back, and that's not going to happen. And it was all done under the guise that everyone needs to go to college and everyone should go to college. Well, that's just not the case. Some people aren't cut out for it. Some people don't have the scholastic or the cerebral constitution to succeed in college. We need people that do other things. We need trades. We need manufacturing, and so on. It's astonishing that so much federal government's asset base is tantamount to indentured servitude as young people pay off expensive university degrees that barely land them jobs making coffee at Starbucks. That's where I got that from. On the other side of the equation are a reported $21.5 trillion in liabilities, giving the government an official net worth of negative $18.2 trillion. We saw recently the debt at $19 trillion. But, we've seen estimates as far as 30 to 65 to 100 trillion in outstanding liabilities. The accounting office, the GAO, calculates that these financial uncertainties total $27.9 trillion, suggesting that the government's true financial condition is far worse than reported. Keep this in mind when we get to the end and we start talking about Venezuela selling gold, going bankrupt, because it's going to paint a picture of what could potentially become of the United States economy. Interesting statement here on gold as we kind of change gears. We'll go talk about gold a little bit. Is gold a commodity, an investment, or money, or both? Gold's a chameleon. That's what this article is trying to say. It changes in response to the environment. And I like this perspective. I like looking at gold from this type of an angle here because, yeah, it's true. I've noticed, depending on the environment, I view gold differently. Gold is making an important change right now. At times, gold behaves like a commodity. The gold price tracks the ups and downs of commodity indices. At other times, gold's viewed as a safe haven investment. It competes with stocks and bonds for investor attention. And on occasion, gold assumes its role as the most stable long-term form of money the world has ever known. A real chameleon changes color based on the background on which it rests. When sitting on a dark green leaf, the chameleon appears dark green to hide from predators. When the chameleon hops from the leaf to a tree trunk, it will change from green to brown to maintain its defenses. Gold also changes its nature depending on the background. Right now, gold is behaving more like money than a commodity or an investment. And that could probably depend on and change depending where you are in the world and what country and what laws you're living under at the time and how that economy is doing. So gold can kind of serve different roles and purposes. Deutsche Bank saying it's time to buy gold, time to buy that chameleon. Gold is still expensive, but rising economic risks and market turmoil mean investors should buy it for insurance, Deutsche Bank said Friday. The recovery since the global European financial crisis had put the price of gold under some pressure. The yellow metal, which some analysts view as a safe haven or as a protection against rising inflation, typically underperforms during periods when the economy is growing or inflation is low. However, in a note issued Friday, the German bank said economic signs are pointing in gold's favor. There are rising stresses in the global financial system, in particular the rising risk of a U.S. corporate default cycle and the risk of a sharp one-off renminbi devaluation due to the sharp increase in China's capital outflows. Deutsche Bank added, buying some gold as insurance is warranted. So take heed of that statement. Now we move on to Venezuela. Well, whereas everyone should be buying gold in preparation for economic downturns and slowdowns, Venezuela happens to be in a bind. Venezuela is shipping gold to pay debt. Who are they shipping it to? Well, Venezuela is shipping gold to Europe so that it can pay its debt. Now, it's not paying the debt to Europe that I can tell through here. I'm sure IMF and many central banks hold the note that Venezuela owes debt to, but the gold is being sent to Switzerland in order to be assayed, because, as you all know, Switzerland is where gold, it's the crossroads for gold. It'll be assayed, stamped, the purity determined, and then sold for cash, in which Venezuela can pay off its debt. Well, Venezuela is running out of cash, and the experts believe there's a high chance it will default by this fall when a string of big debt payments are due. It's a question of when Venezuela will default, not if, says Russ Dallin, managing partner at LatinVest, a firm that invests in Latin America. They're running out of options. That's why the country is using the dwindling gold reserves to make debt payments, but experts say it has to ship the gold all the way to Switzerland for two likely reasons. Switzerland's the largest hub for gold transit, and once they verify the quality of the gold, Venezuela will then sell it for cash, like we just said. Venezuela can also put up its gold as collateral in exchange for a cash loan from banks in what is known as a gold swap. There are not enough dollars to pay their external debts. I like this quote because it's going to pertain to every country, individual, and every government. There are not enough dollars to pay their external debts. I really believe that could hold true for the U.S. as well. That this is coming from an economist at Goldman Sachs. The economic environment is one of the worst in the world. It's clearly unsustainable. Unsustainable. That same word has been used to describe the United States financial situation numerous times from numerous experts. So replace Venezuela in this article with the United States. There's just not enough dollars to pay debts, and the situation is unsustainable. Any way you look at it, Venezuela, or the U.S., is in a severe economic recession. Inflation is skyrocketing. The IMF estimates it will rise 720% this year. Its economy tanked last year, shrinking 10%. The value of its currency, the bolivar, has plummeted. If you live in Venezuela, buy gold, buy silver, hold it tight. If you have access to weapons, get them as well. Hunker down, grow a garden, and hide out for a little bit. Dig in deep. Default could soon be knocking on Venezuela's doorstep. In November and October, Venezuela must pay almost $5 billion in debt. Barring lots of help from China, one of Venezuela's popular sources of finance, experts believe Venezuela will probably default. Good luck, Venezuela. Good luck, Canada, who is also selling gold. I wonder what's going on there still. Thanks for tuning in to the Junius Maltby channel for a look around the world. Keep stacking. Keep your eye on the news. And as always, please like, share, and subscribe. Drop your comments down below and participate here on the Junius Maltby channel. Have a good day.